Good set of numbers, a profit for the third quarter that beat the highest analyst estimates. Where was the alpha in your numbers? Where did the beat come through from?
Good morning, Manus. I think overall where the beat comes from, we always first and foremost look at clients. So 400,000 new clients, that is a good number for us. We have now 37 million clients. We have 10.5 million clients who do multiple products. We call them primary clients. So that part is good. I would say the other part where we did well is loan production. So those clients, they did 8 billion of lending business with us and deposited 4 billion with us. The other part which causes a beat is in fact the risk cost. They are extremely low, 16 basis points of risk-weighted assets. And then finally, if you keep your cost income in check like we did, it's around 53.8% rolling 4 quarters. Then yeah, you get to the number which we have. So it's 1.375 billion net profit. So in that sense, we can be quite happy. Yeah.
Good morning to you, Koos. One of my colleagues tells me that your bank is one of the most geared banks in Europe to rising rates, with net interest income contributing 3/4 to total revenue. So what are your expectations around rate hikes in Europe or tapering from the ECB? How can any of that help you to generate more profits from your lending business?
Well, overall, if you ask, like, are we very much geared towards higher rates? That is not the case. In fact, what we try to do is we are a big deposit-taking bank, and we always try to make sure that we do the investments of our deposits in such a way that it matches, in fact, client behavior. So we are striving for a stable margin. Nevertheless, if we would see interest rates going up, then normally we would make a bit more margin, so it would be beneficial from us. So, but it's not by very much positioning around it. It's more the case that if rates drop and you cannot drop your savings rate further, the downside is a bit more the sensitivity rather than rates gently going up. That would be certainly a scenario we would like.
And do you stick to the view in the market that there's no rate hike from the European Central Bank until the beginning of 2019? I mean, normalization in the fourth quarter, perhaps towards zero. Is that your base case scenario?
Yeah, I mean, where we would be hoping for a gentle, rates moving up. In fact, in your base case scenario, we are following also what Draghi is saying, and that is that longer, over a considerable amount of time, interest rates are not going to go up. So in that sense, we have to live with a period of lower rates for a bit longer, yeah.
You set yourself a plan to achieve 900 million euros in annual savings by the end of 2021, some time ago. You're eliminating jobs to do that. Koos, are you on target for those savings or running ahead of target? How do things look?
Well, it's early stages. I mean, what you find this year in 2017, we are making the investments in order to come up with the savings. We had a bit of delay, but then you're talking about maybe within a quarter, because we also needed regulatory approval for a number of the restructurings. So overall, I would say in the bigger picture of the next 4 years, we're on schedule. But if you look at it more with a microscope, then you can say like we are slightly behind because of all the approvals required. But I think, there's ample of time to catch up.
Because there's one subject that every CFO and CEO is sort of battered by, it's capital and regulation. I mean, how comfortable are you as the CFO that you have sufficient capital under the new regime? And is that uncertainty holding back any kind of dividend payout? Where are we? Where do you settle in terms of the capital that you have in your hand versus a restraint? Is it a restraint on regulation? Are we just sitting waiting for clarity?
We definitely need to have that clarity. Under the current regime, we have a bit more capital than what is required. Under the new regime, you might say end state, we don't know whether we have enough capital for that. So that makes our capital planning process very, very difficult. The other thing what we don't know is, given the fact that you don't know the required capitals, the question is, are we pricing our loans adequate? What we have roughly done in the past, we have said like all the longer term loans, we price them at a higher higher capital requirement than the shorter ones, given the uncertainty. But it kind of would help if we at a certain moment get clarity on this issue.